always feel like the market is watching you. Like whenever you enter a trade, it quickly reverses against you. That may be because you are entering wrongly, right? So today I've got another strategy that I'm going to be sharing with you guys, right? So today I'm going to be sharing the trendline breakout strategy that I use, right? So actually I'm going to be sharing with you three trendline breakout strategies, right? But the third one is the best. It's the one that I use, right? So stick to the end and watch throughout the video so that you understand it better, right? As you can see, most of the times the setups uh, that are taught in the books, right, that are written in books, most of the times don't work, right? So that's generally the breakout in the retest, right? So most of the times they are not available, right? We don't get what such perfect trades all the time, right? They are trades that come perfectly, right? But most of the time we don't get what perfect trades, right? So today I'm going to be sharing with you how you're supposed to do it correctly, right? So watch till the end so that you understand exactly what I'm talking about, right? So right over here, let me zoom out my chart a little bit, right? As you can see right here, I'm going to be, let me use what these examples, right? So we've got a trend line here, right? You've got a touch over here and a touch over there, right? This the trend line could broken out over here, right? So how are you supposed to know if you're supposed to enter exactly soon after that breakout, right? So generally what I personally use, what I personally do, right? Though I'm not a fan of this one, of this first strategy, right? The first strategy is just entering on the breakout, right? When there's a breakout, just enter quickly, right? You just enter right there and there, right? I'm not a fan of this, right? Because well, most of the time there are quite a few there are some fake outs, right? So generally I don't like using this strategy, though most of the time I do end up using it, especially if there's a consolidation, like just like in this setup, right? As you can see, this is a way, right? If there is another pattern that's supporting this entry confirmation, that's only when I enter, right? So as you can see right here, it's consolidating over here, right? It's creating some sort of this wedge, that this triangle, right? So that's the only reason that I would enter here. Why? Because there's what? There's a further confirmation, right? So generally, how are you supposed to know if you're supposed to enter exactly soon after the breakout, right? So you are just supposed to look at what at the candlesticks, right? The candlesticks that break out through the candlestick that breaks out through the trend line, right? So as you can see, candlestick that breaks out is this one, right? The next one over there, right? Why? Because it's the one that because this one just retested, this one just tested and refaced, right? But this one is the one that what is the one that broke out, right? So as you can see from its candlestick, it's quite a powerful. It's showing strong momentum to the to the downside, right? So you are guaranteed that it will fall down, right? The market will sell, right? We also have a trend line over here, right? Let me zoom out my chart so that you'll be able to see it quite clearly, right? So we've got a touch here, right? I'm sure everybody knows how to draw a trend line. How to draw a trend line. If you don't know how to draw a trend line, comment in the comment section down below, and I'll record a video for you, right? So and on how it's done, right? So right here, right, using the breakout strategy, you got this kind of stick right here is the one that breaks out the trend line, right? So this is also a powerful candlestick. Why? Because it's showing strong momentum to the downside, one, right? And two, it's an engulfing candlestick, right? So for the green candle here, right, it gets completely engulfed by this one, by this next red candle. So you'll be entering over here on the on the candle close, right? So as you can see, that's why I'm not a fan of this strategy. Why? Because there's a reversal soon after. Yeah, you get into some profit, right? But there's a reversal. Though it does work because your stop loss will be over here, right? Let me remove all this, right? Though it will work because your stop loss will be above here, more obviously this is stop loss over here, right? Above this previous high, right? And your entry, you said your entry is over here, right? Our entry is over here, right? Sorry, that's not our entry. Our entry is on the close of this candlestick, right? So our entry is over here, right? So generally your stop loss would be in the what got hit, right? Because we eventually went all the way down and you just keep on what adjusting your stop loss, moving it into profit, right? So whenever there's a breakout and our stop loss would have got set it over here, right? That's when you would have exited, right? Though this strategy does work, most of the time it does work, right? But especially if you've got enough capital, you can be able to, to hold the trade, right? But if you've got no capital, let's say you've got a few dollars, right? You want, I don't encourage that you use this strategy. And if you've got a large capital, I encourage you to enter a small position, the smallest lot size preferably, right? Or just another, just a small lot size so that you'll be able to add positions when there's a pullback, right? So then the second strategy is the pullback and retest of the trend line, right? So as you can see here, right, on the first trend line, right, this trend line right here, the one that touched here and here, right, we don't get quite a pullback, right? We don't get a pullback to that pullback to the trend line, right? So we don't get any entry over here, right? And on the second trend line, right, let me shift to the banner, right? So right here we've got a touch, then breakout, and we've got a retest to that trend line, right? Though you're not supposed to enter exactly over here, right? You shift back to your 15-minute time frame. Let's shift back to our 15-minute time frame, right? As you can see over here, this is the pullback to the trend line, right? So you enter over here when there's what? So as you can see, there's a consolidation showing that the market is into what? Can't break what? It's showing a slowdown in momentum. Why? Because it can't break what? Can break past this what trend line. That's why it's consolidating over here, right? So you can draw a small trend line over here, and when it gets broken, you enter using what the first strategy that I mentioned, right? So, or you just have to wait for a candlestick confirmation, right? So over here, our candlestick confirmation would have been this red, large red candle over here, right? Or especially if you don't know candlesticks, right? This engulfing red candle. So you enter right here, right? And as you can see, you went down into what? Into profit, right? Or you can use these sort of like railroad tracks, right? Railroad tracks, so they are just simultaneous red, green candlesticks, right? So that's the candlestick pattern that was being formed over here, right? The stop loss would have been what? Above the above the previous high as usual, right? So your stop loss would have been here, right? You enter over here on the retest of the trend line. As you can see, it's quite a small stop loss, right? And your take profit is used as I mentioned earlier. You just keep on adjusting your stop loss to the one. It's when the market breaks the market structure, you adjust your stop loss. Breaking market structure, you adjust your stop loss. Breaking market structure, you adjust your stop loss, and it gets what hit over here, right? That's how you generally use the second strategy. I will show you other examples later, right? Then the third strategy that I'm going to be sharing with you, right? The one that I use, that's my personal favorite, right? The one that's respected most of the time is combining the trend line breakout with a flip zone, right? A flip zone. What do I mean by a flip zone? A flip zone is just generally a breaking a breaking after a breaking market structure, right? So let's say over here, right? A flip zone is when we test this previous support over here, right? We test that and we continue going down, right? So using this strategy was saying, let's say about a setup like this, right? We've got our trend line over here, right? We've got our trend line over here, right? It gets broken, right? And most of the times, especially using tariff using when trading indices, the market doesn't pull back to this trend line over here, right? It pulls back to this region over here, right? That flips on over there, right? So we are going to be marking out this range, right? That's what we are going to be using for our entries, right? So after you break out the trend line, you mark out using you'll be entering either on dot. Our first entry will be on dot. Our first entry will be a test dot to be the flip zone, right? This flip zone over here. And our second entry that we are anticipating will be an entry on dot on the trend line retest, right? So if I've got a candlestick confirmation over here, if I've got a what? your candlestick confirmation, then you enter, right? So using that over here, we're going to be marking out previous what. So personally, I don't like using what the horizontal line only. Why? Because as you can see right here, we've got what quite a few flip zones, right? So we've got this flip zone over here, this one over here, we've got another flip zone over there, we've got another flip zone over there, right? All these are what possible what flip zones that we can enter using, right? So personally, I just use what the horizontal, the box tool over here, right? So I just mark what this whole region, right? Starting from what over there, right? Then after the market test this region, I'm just looking for my what candlestick confirmation. Then I take what my entry. Though this time I was late, I couldn't enter, right? But as I always say, don't chase the market, right? If you're late, you're late, right? Don't chase what the market, right? So over here, our candlestick confirmation is what is this evening star over here, right? We've got this doji long weekend showing a slowdown in momentum, right? As you can see, the candlestick are getting smaller and smaller, and we've got what this doji over there. That's when we take our entry, right? And as you can see, we're in profit, right? So this is quite a simple strategy, guys. Just try it out on demo first before you go live, right? So let's take for example over here, right? I just zoomed in, I just dropped down to the 15-minute time frame, and I just zoomed in, right? Uh, right over here, I've got a breakout of this one, a breakout of this trend line, right? Let me just start off the trend line over here. I've got a breakout of this one trend line, right? And as you can see, our candlestick didn't pull back exactly to the trend line. So that's why most of the times you don't get an entry, right? And when you see that the market starts going down in your direction, you just chase the market, right? Maybe you enter right here, right? And you get stopped out. Why? Because you don't get what these entries because they don't come most of the time, right? So just mark out your region, right? So I'm just going to mark out what this region over here, right? So our entry over here would have been what right here when the first touch, right? We've got what a red bearish engulfing candle over here. That would have been what my entry confirmation. So you enter over here, right? The stop loss goes above what above here, right? Or above there on the flip zone, right? So generally it will be now above what above this resistance. Why? Because we're anticipating that if the market doesn't reverse here, it's gonna reverse here on this when there's this small order block also, right? So this will also be what a strong confirmation. Why? Because there's a small order block, right? Small order block plus our trend line. So this will be a perfect entry. So if it pulls back to this entry over here, I'm going to enter my sales, right? And then for the take profit using what the strategy, right? So for the take profit of what trend lines, generally you just have to mark out your resistance zones, right? So the previous one higher lows, right? So right over here, first take profit will be what? So if you enter here, so your first take profit will be right over here, right? You mark out these previous zones, right? So first take profit over there, second take profit, and don't want to mark this is too close, right? So I'm just marking out, and these are zones. Remember, by the way, these are zones. I don't like using a specific point only, right? So these are zones. That's your second take profit, your third take profit, and finally your last take profit. Though most of the times it doesn't it doesn't respect it doesn't touch what this last take profit. Why? Because generally there's a let me show you, there's a breaking market structure over here to the upside, right? So most of the time it's just this flip zone over here, this zone over here, right? And it continues up. So generally I like to use this zone for my take profits, right? So that's it for this video, guys. If you like the content, like, subscribe, and share the content, right? So if you've got any questions, leave them in the comment section down below, and I'll address them. And if you've got any video suggestions, any suggestions that you want, something that you want me to improve, also leave that in the comment section down below, and I'll address that as soon as I can.